So I think it's the way that the bank has to structure it out. And so for us, it's really, that's been the most challenging part right now that we're dealing with on the 1031.
What's your biggest frustration when it comes to the 1031 exchange, Cameron?
We're going through one right now. And so, it's probably not what you're expecting my answer, but for us, it's specifically, so we're 1031ing into storage, and that storage facility, we're buying for 2.1. We're paying the wholesaler 125 grand. There's about $150,000 of capex. And so I think for us, actually, the biggest challenging thing is getting the 1031 to fund the whole thing. And it's interesting. A part of that's also a lot of times a bank won't fund the wholesale fee, right? They're like, well, that's not part of the acquisitions. That's a fee you're paying for the deal. But there's ways kind of to back into that where they will pay for it. At least in my case, we've gotten that. Thankfully, our bank didn't have a problem with it. But then where it gets tricky is, I think your 1031, the trick is like, they kind of don't want to pay for improvements. And so I think it's the way that the bank has to structure it out. And so for us, it's really, that's been the most challenging part right now that we're dealing with on the 1031.
Yeah, sometimes sometimes it feels like you're having to squeeze like a round peg into a square hole, and it can be a little bit cumbersome, right? It's equal or greater debt, equal or greater value for what you sold for, and typically the whole entity must move. And sometimes it works out. If you can find the deal that makes sense, man, it's a great way to grow wealth, great way to defer that capital gains tax, especially in investment real estate. But sometimes it can be a shotgun wedding. You run out of time, or just you don't have a big enough deal, or it doesn't line up. That being said, we do have an alternative. If people want to learn more about that, you can go to capitalgainstaxsolutions.com. Not only does it work for saving a failed 1031 in case a bank won't lend or in case a deal doesn't work out, but it also works for primary homes, businesses, crypto, stock, which the 1031 doesn't even work for. So if you're curious about what that looks like, go to capitalgainstaxsolutions.com. Also check out the new book that just came out on Amazon, Building a Capital Gains Tax Exit Plan. We have the Kevin Harrington from Shark Tank in the book, and a number of other really smart multifamily investors that are in the book as well.